What's up everyone, it's Scotty with MoneyVest. So this is going to be a complete market update for all of you. We're going to break down exactly how the markets performed on Friday and how we closed out the week. We're going to take a look at the market's performance, sector performance, valuations, go over the jobless claims numbers, and of course talk about Magnificent One, which is Nvidia, and that market cap is now eclipsed a little bit closer to $2 trillion, which is now at the 12th spot. If you consider the top 11 countries with the biggest GDPs, Nvidia ranks at number 12, and it actually has a much bigger valuation than most countries' GDPs in the world. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. Links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, over 45 plus tutorials and lectures and videos that you can access and of course watch, along with full access to all of our spreadsheets. Everything that you see over here is going to be moving over to our moneyvest.com website here on March 31st. That's when the beta launch is going to take place, and of course you'll have access to the Discord channels, the trade alerts, the trade ideas. Everything's going to be available over there as well, so links going to be down below. We'd love to have you on board if you're interested in joining us, and also do check out my Instagram. My handle is going to be CastWRP. We'd love to connect with you over there as well. I do post a lot of interesting stories, updates, and of course polls, tips and strategies, portfolio updates as well. So Nvidia is now worth more than GDP of every country except these 11. So this is where Nvidia ranks at almost $2 trillion in market cap. Of course, a little bit lower compared to Mexico, Canada, Brazil, Italy, France, the UK. We got India, Japan, Germany, China, and the United States as well. So Nvidia has definitely seen a pretty significant, rally over the last, I would say, 18 to 24 months. And in the last couple of years, I mean, it has gone from like a couple $100 billion to almost $2 trillion. And that, of course, has been a very, very astronomical move, a jaw-dropping move for a stock for the company here, on the back of course, artificial intelligence and chips, and of course, generative AI models. Initial claims for the previous week came in at 201,000 compared to 216,000, so a little bit lower. So we still have a very, very strong economy with very low levels of unemployment and very low levels of jobless claims and high levels of employment here within the US, which definitely goes to show that the economy is resilient and very, very strong. Apple here dropping 1%, Tesla was down 2.7%, AMD dropping almost 3%, Google, Meta, Amazon, Microsoft, everything else was basically flat. Palo Alto Network, Adobe pushing up about 5 to 2% respectively here, and we did have financials and industrials and healthcare and consumer defensives pushing higher very, very nicely. And this right here is the entire market with a lot of momentum except for healthcare, consumer defensive, industrials, financials. They were all basically flat to slightly down. This right here is going to be the group performance, so a little bit of a split market in the last one day. We did have industrial, utilities, materials, healthcare, financials pushing higher. Everything else was basically down. In the last 1 week, again, most sectors, 10 out of 11 sectors pushing higher, with real estate selling off. In the last 1 month, all sectors are green. That has done really well in the last, of course, 1 month here. Now, if you take a look at the futures and the commodities, we did have cocoa prices, orange juice for the win, feeder cattle, 30-year bond here, oats, silver, gold, everything pushing higher, with heating oil, crude oil, gasoline, volatility, and natural gas selling off. Bitcoin here just over 51,000, and Ether just over $3,000 as well at the moment. Now this right here is going to be the valuation. Now before we dive into that, I'm going to come back to this. If you take a look at the yearly performance, this right here is where we're at for each sector within the S&P 500. So of all the 11 sectors, this right here are the 11 sectors. 3 are still underperforming and down on a year-to-date basis. These are your real estate, your basic materials, and your utilities as well. And everything else is green, with technology, of course, leading the charge here, up a little bit over 9%. And then, of course, we have healthcare up 7.5%, communication services also up almost 7.5%. So those are the 3 sectors that are leading the way right now in terms of that market performance. Then we've got consumer cyclicals, which has your Amazon and your Teslas barely up almost 3% on the year. I think that's probably because Tesla has not been participating. It's actually down over 22% on a year-to-date basis. Amazon alone cannot do enough, and it's only up 2.8%. This past week, we did have consumer defenses actually push higher, up almost 2%. We did have financial stocks push up 1.2%, and industrials also rallied a little bit over 1%. And more importantly, healthcare also outperformed, up over 1.7%, and materials pushing up 1%. So we didn't really have a lot of cyclicals or technology or comm services was basically flat. Technology was only up about 0.5%, and cyclicals only up about under 90 basis points. So we did really see a lot of momentum towards the more defensive and utility and staple sectors as opposed to technology. So that's something to keep in mind here. Now, when it comes to the valuation, as I've already mentioned before in my previous videos, I think comm services is one of the sectors that is priced really well. If you take a look at 17 times forward PE with about a 1.28 times PEG, that's actually quite reasonable and quite good. Technology is going to be a little bit of a no-no here because 25 times earnings multiple with a little bit over 2.5 times PEG. Price of sales starting at just under 6 for the company, which is the highest among all sectors here. And of course, comm services coming in at a decent second at over 3 times sales. Price to cash is going to be just under 13, with technology sitting at well over 21 times cash here for the company as well. And again, comm service is going to be just under 13, and price to free cash flow we're looking at 20, with technology trading at over 35 at the moment. And consumer cyclicals, which does include your Amazon and your Teslas, also quite reasonably priced, I would argue. 18.6 times forward earnings with 1.75 times PEG, with a price of sales which is obviously really, really low because it does include the retail sector. Amazon's part of it, Shopify's part of it. So 1.63 is going to be that price of sales number, with price to free cash flow trading at just under 30 at the moment. Now, don't let real estate kind of fool you a little bit in believing that it's got a really low PE or a PEG ratio. And energy and financials do have low forward price earnings multiple, but really, really high PEG ratios at over 5. And materials had 3.57. And then we got utilities at over 2.2. And consumer defenses at just under 3. So those are sectors that on a forward basis, on a PEG basis, are still quite expensive in my opinion at the moment. Now, moving over to crude oil prices a little bit, just over $76 a barrel at the moment here, getting rejected at that resistance of $79 to $80 a barrel. So this right here is going to be that resistance to keep in mind. We're consolidating sideways. We're kind of moving in that range. Support level is going to stay put at $72, $73 a barrel. For crude oil, lots of consolidation sideways, so that is going to be that support level to keep in mind. Volatility, on the other hand, also dropping here, down about 5.4%, a little bit under 14. Resistance is going to stay put at 14.9, closer to 15 here. And inside this red rectangle, also a very, very important level of support to keep in mind, all the way up to 18 to 20 levels. We know exactly what to look for. We know exactly what to watch, and when to actually start dollar cost averaging into the market, because I do believe that right now the markets are somewhat trading at a premium, meaning that they are trading at some expensive valuations at the moment. And of course, if they do drop down to 11 to 12 levels, that would be a very, very solid buying opportunity for us to dollar cost average. When they drop down to 11 to 12, that's going to be a level for us to be cautious. When they spike, when they actually rip higher to 18 to 20 to 30 levels, that's when it's going to be a very, very interesting opportunity for us to dollar cost average into the market once again and be a little bit more aggressive. I just want to show you some options that I've sold on Enphase. So this right here is going to be the options that I've been selling on. Let's see here. So my laptop's not showing up. But basically, my Enphase calls are up a little bit over 69%, almost 70% up on one of those calls, and the other one's up almost 60%. So I've done really well in both of those calls here, up almost $2,000 profit on those Enphase calls. And that's exactly the whole idea when you are hedging your positions and generating cash flow. That is one of the best things that you can actually do, is sell options and generate cash flow at the same time. And Enphase, since it has been selling off a little bit, it has been dropping. It's back down to $118, $120. Been able to, again, take advantage of those options. So again, if you want to get access to all the options alerts, trade ideas, buy and sell alerts, everything, link's going to be down below. And I'm actually not kidding. For those of you who are actually part of our community, they can vouch for me and for our community. When we are selling options, our hit rate is well over 80%. Our win rate is well over 80%, and I'm not kidding here, because every option that I've sold, whether it's a put or a call, it's done incredibly well. I mean, the success rate is really high. And if I basically go over to the options Discord here, so if I show you what the options trades look like, this is what you can expect from the community, from us. So this right here is going to be all the alerts. And again, closed covered call for 60% profit. This right here is going to be rolling out of that option that I rolled out for $140 and actually received the net credit for 70 cents per contract. So I actually received premium. But if you look above 70% profit here on Tesla calls, this right here is another Tesla calls, 42%. This right here, let's see, 50% profit on Enphase calls, 70% profit on Tesla calls. If you scroll up a little bit, and this is just part of it's just the tip of the iceberg. These are all Tesla calls, I believe, for about 95% profit, unrealized gains of about $10,000. This right here, let's let those Tesla calls print. Another Tesla call, 76% profit. This is, again, Tesla calls. We've sold a lot of Tesla. Palantir, 91% profit. This right here is, again, Tesla, 32%. This is the only one, which, again, Google went actually in the money. Break-even was 137. Which ended up, I think, getting expired in the money, and I had my shares called away. But this is Palantir, 54% profit here, 96% Tesla calls. Again, Meta, 32%, which actually ended up being in the money and premium was received fully, and then of course was a good profitability there. But the bottom line is selling options is one of the best ways to generate some consistent passive income if you are looking to hedge and de-risk your portfolio a little bit. And that is exactly what we talk about in our Patreon, in our courses. So link's going to be down below, or message me and I'm more than happy to help you out moving forward. So volatility is done, crude oil is done, Bitcoin here just a little bit over $51,000 at the moment. Of course, consolidating sideways at that support, and Ether just under $3,000 at the moment as well. And resistance going to be all the way up to 3,500. So I would highly recommend anybody who is just learning more about options that you get started ASAP to learn more about options trading and to, of course, generate some income along the way. Now, S&P 500 just a little bit under 5,100, trading pretty much at an all-time high. Resistance, is pretty much unknown because we're in a price discovery right now. Negative divergence. This is going to be a support at 5,045. Breakdown below this is going to put us on the map to getting down to 4,800. That's going to be a quite reasonable pullback and a sell-off of about 4 to 5%. Quite reasonable, something to be expected in the future if we do see a pretty significant sell-off here. And again, negative divergence continues between for the price action here at the moment. Talking about the NASDAQ, so IXIC also getting rejected at almost at an all-time high at 16,200. Support level is going to be inside this green rectangle between 15.15 and 15.4. So a very, very important level of support. And we've got a negative divergence here also with the RSI making lower highs and the price action itself making higher highs as well at the moment. Talking a little bit about Apple. And Apple here just selling off, making lower highs and lower lows. Support level is going to stay put at close to $180. So that is going to be that support level to keep in mind. If you do see a breakdown below that level, next support is going to be down to $165 per share for Apple moving forward. So that is going to be that next support in case we see a breakdown below $180 per share. Resistance is going to stay put at close to 189. Amazon, I've got Amazon calls at 170, which are most likely going to expire in the money. I don't mind getting rid of some of the shares. That is completely okay. I actually rolled those out from 160 to 170, so that's totally fine. And resistance is going to stay put at 176, so that is going to be the level to watch. And of course, we do have a little bit of a gap to also fill for Amazon, with the support level is going to stay put at 155 for this company as well. Talking about Tesla, and Tesla here also finding it a little bit more challenging to see that rally beyond that $200 resistance. So it's actually struggling to break out above this red rectangle that's sitting between $200 and $214, $215 per share. If you do get a breakout, the next target and resistance is going to be 240, 244. That's going to be that next level to keep in mind. Support level is going to stay put roughly around 179, close to $180 per share for Tesla moving forward. Talking a little bit about Nvidia. And Nvidia here trading pretty much at an all-time high of well over $823, $824. Support level is going to stay put at 745 right now, all the way down to low 600s to as low as low 500s. A much stronger, much better support level to keep in mind for Nvidia. But once again, incredibly overbought here. And I wouldn't be surprised if we do finally start to see a bit of a profit taking here, considering how much it has rallied and the earnings are behind us. So there is a possibility that we do see that continuation of that profit taking that we witnessed pre-earnings as well. Talking about advanced micro devices, and AMD also just consolidating sideways, still getting rejected at that resistance at 181 to 185. So this right here inside this red rectangle, very, very important resistance area to watch. Support level is going to stay put at 159 to $160 per share for AMD, and below that we're watching 130 as another support to keep in mind for advanced micro devices. Talking a little bit about Meta platforms, and Meta here also getting rejected at that resistance of 488, 490. Support level is going to stay put at 451, and this right here is a gap that potentially needs to get filled. If you do see a breakdown below this, next support is going to be down to $383 per share for Meta moving forward. Resistance, like I said, is going to stay put at 488 for the company At the moment, support level at close to $383. Talking a little bit about Netflix here, and Netflix on the day also just consolidating sideways, not really going anywhere. Resistance is going to stay put at $600. Support level is going to stay put at 571 for the company, and below that, if you do see a bigger breakdown, we've got all this gap that still needs to get filled, and eventually a support all the way down to 485 to 495 for Netflix moving forward. So that is going to be a very, very important level of support to keep in mind for Netflix. And Google on the day, support level is going to stay put roughly in the 140 to 144, as we've already discussed. Resistance all the way up to 150, 151 for the company. And just a lot of consolidation sideways in that range. And below that, we're going to be watching 126, closer to $127 per share for Google moving forward. So lots of consolidation sideways in that range for the company. And finally, we got Microsoft, and Microsoft selling off a little bit intraday. So intraday, there was a pretty big sell-off, down about 30 basis points, $410 resistance. Price that it's closing in at 421 resistance. Support level is going to be at this higher low. And below that, if you do end up breaking down, 384 is going to be that next support level to watch for Microsoft as well. But the bottom line is that we already know that these are prices, these are stocks that are trading at a little bit of a premium relative to their earnings and sales. And for that reason, these are not prices that I'm particularly interested in dollar cost averaging in at the moment, but will be in the future if they actually do end up trading down to pretty decent support levels and support, in other words, pretty decent valuations and prices. So don't forget to connect with me on Instagram. Handle is going to be CasWRP. Do join our Discord and our Patreon if you want to get access to all the alerts and the members-only private videos. And more importantly, get access to all the beta launch on March 31st for the moneyvest.com website here. So link's going to be down below if you want to join. As always, happy investing. Make sure that you drop a like and subscribe. I'll see you guys in the next video.